Hello everyone, welcome to a new trading recap. Today we are going to go over my full trading day and it is Thursday, March 13, 2025. So I took a couple trades, I believe about six trades. I lost one and won five. So the first trade I took it based on the first presented fair value gap, as that is the strategy that I use the most. I took a short with three contracts. Here you can only see two. I had already sold one. I'm about to sell another one right there. You guys know I like to take my partials and secure some of the profits. And then after that, I move my stop loss to break even. And then the rest of the position, I wait for it to go all the way down to that red line, which is $19,400. That is my sell side liquidity, or the one that I was targeting at this specific time. Also, you guys are going to notice that most of my trades today were shorts. I mentioned on my previous video that my bias is bearish, and it's most likely going to continue to be bearish for the rest of the week, or unless I see something changes in the higher time frames. So a couple minutes after I took that first trade, I see that we make two market structure shifts. So I decide to take a long position. I was hoping to go all the way up to that first presented fair value gap. But as you're going to see right now, I decided to close that trade manually. So I took a quick scalp there, 50-point scalp. And then there you can see some of the profits that I had accumulated already in two PA accounts with Apex. After that long, I decided to take another one based on being above the first presented fair value gap. We switched the structure again to the upside, and then that trade didn't work out. I also see that we immediately go below that first presented and then make a market structure shift to the downside. So I decide to go with the trend and I go ahead and place a short. And then once I'm seeing that price is respecting that fair value gap created right after the market structure shift and also respecting the first presented fair value gap, I decide to switch the position and keep going lower. As you can see, I added one more inside that first presented fair value gap. And then once I saw some displacement, I got rid of one of the two contracts, as you're going to see there. And then I was thinking of where should I get rid of that second one. Maybe if I saw a larger displacement, it would have gone all the way down to that sell side. But as I saw that price started retracing, I just decided to exit that second or that last contract also manually. And then after that, again, there you can see the two PA accounts. So I use a copy trade for one of the accounts. And then here, I was planning to take another short to another sell side liquidity area that I had marked. I believe, uh, I believe that was Tuesday, low of day. So I wait again for the market structure shift following the trend. There I place a limit order, and as we tap into that inversion fair value gap, I decide to take my entry there. As you can see, I'm only the scalps that I'm taking after the first trade of the day, I'm taking them only with one contract. So I usually size down after having a good first trade. I just want to size down, and that way I'm protecting most of my profit, and I'm only risking about 20 to 30% of the daily profit on the rest of the trades. And most of them were scalps. So I was just trying to add some more profit to my daily P&L. There, as you can see, price just stayed in that area for a while, and then unfortunately this trade gets me stopped out on break even. Right after it displaced a little bit, I decided to place that on break even just because we have some breakaway gaps all the way up there, where the displacement started to the downside. So if price just wanted to go and tap into those, I just didn't want it um to be part of that movement, of that retracement. So the reason I placed my stop there, it's because I didn't think price was going to go back up, just because we had that sell side liquidity area so close. And this trade was based on the low hanging fruit objective. That's the strategy that I was using there. There, as you can see, price just took that buy side that was created from those two wicks, and then as I see that it starts pushing lower, I decide to enter again, and then this time it actually goes all the way down to my sell side liquidity, which was 19,200. There we take that short-term sell side. Uh, so there I was thinking, all right, if we close below, I'll stay in the trade. If we just wick it, then I'll go break even again, and then most likely get out of the trade with whatever profit I have there. You can see that the structure just gave us more fair value gaps in favor of the short, and then pretty quickly it just ends up moving to the downside. I wish I had entered with two contracts so that I could have sold one at that short-term sell-side liquidity, but again, I'm sizing down after my first trade, so I'm following my rules and entering only with one contract, so that way I'm not risking uh, too much of the accumulated profit for the day. There, I'm basically covering myself with the structure, and then once we get there, as you can notice, we have a another sell side liquidity area that it's below that. It's at 19,140. So I was thinking that maybe price was just going to displace pretty quickly all the way down there. Um, so I decided not to exit the trade at the 19,200, and also because I just kept seeing more FBGs in favor of my trade, I just decided that I was gonna wait to see if it was gonna go down all the way down there, but it didn't. So I just ended up closing um, the trade at around 19,200. And there, as you can see, I was able to make a little bit over $1,600 in two $50,000 accounts, not risking much. The biggest amount of contracts that I traded was three, and that was only for the first trade of the day, and then the rest was just uh, one contract and two contracts. So with this, I just wanted to show you guys that this is a very good way of starting your trading career, and it's a very good way of making money without risking any of your personal money, any of your personal savings. The way I do this is with prop firms, and the one that I use is Apex Trader Funding. I feel like it's the safest way to start your career. So if you're thinking of starting to trade, do not, I encourage you not to use your personal savings or your money. I encourage you to use a prop firm. Again, the one that I use is Apex Trader Funding. Here you can see all their programs. They have accounts from 25,000 all the way up to 300,000. They have pretty simple rules, and also they have great discounts. Today is their last day for an 80% discount on all accounts. And yeah, I'm gonna leave the link in the description for these accounts. So if you end up using one, just let me know, and also like, subscribe, and see you guys on the next video.